All right, good morning, everybody. Today we're going to be talking about preparing balance sheets. So today we'll talk about what are financial statements, what is a balance sheet specifically, who are balance sheets for, how do we prepare balance sheets, and then we're going to go through how to make a balance sheet. What are the 5 steps in making a balance sheet? And then we will look at different forms that they are reported as. So you will be successful when you can list the steps in creating a balance sheet, when you can use the equation we learned yesterday to calculate the owner's equity, the accounting equation, and when you yourself can create a simple balance sheet. So what exactly is a financial statement? A financial statement is a document that helps business owners keep track of how the business is doing financially and what is the financial condition of their business. There are 3 very common ones, and we are going to be looking at balance sheets today. Another 2 common types of financial statements are income statements and statements of cash flow. So specifically, we will look at balance sheets today. A balance sheet is used to record and summarize the financial information, so the assets, which is everything we own, the liabilities, everything we owe, and then how much we are worth as a company, our owner's equity. So the balance sheet is a snapshot. It is a moment in time. It shows what our financial position is on an exact date, on a particular date. So it doesn't show us over a period of time. A balance sheet is for a particular date. Do you remember the balance sheet equation from yesterday? If you do, you'll remember that assets equals liabilities plus owner's equity. And if you rearrange the equation, that gives us assets minus liabilities is owner's equity. This is how we find out the owner's equity section on our balance sheet. All assets that the business owns are recorded under the asset section of the balance sheet. We also have things called liabilities, so that is what we owe other people. So step 1 in creating our balance sheet, we need to fill in the heading, the 3-line heading at the top of our document. It has to answer who, what, and when. For example, it would say who the owner is in the name of the business, what the balance sheet is, exactly which financial statement it is. If it was an income statement, the what would have to say income statement, and when, that is the specific date that the balance sheet is made for. Step 2, we need to list all of the assets on our balance sheet. Assets are listed in order of how liquid they are, how easily they can be converted into cash. So the first item on our asset section of our balance sheet is always cash, because it is the most liquid asset. Then the ones that are less liquid and are harder to sell, like buildings and land, will be listed at the bottom of the asset section. This is a little bit of review. As I said before, capital that can be converted easily into cash is called liquid capital. Now we go on to step 3. In step 3, we have to list all of the liabilities. Essentially, all business have liabilities, something that they owe other businesses because they buy on credit or they receive loans to run their business. These liabilities are listed in order by their maturity date. That means the date that they have to be repaid by. An example is accounts payable, which is money owed to other businesses for something maybe we bought from them. The individuals or those specific businesses that appear under the liability section are called our creditors, because those are the people that who we owe money to. In step 4, we have to calculate our owner's equity, and we have to use our balance sheet equation to do this. Assets minus liabilities will give us our owner's equity, which should be listed in the same column as our liabilities. Finally, in step 5, we have to put everything together. The balance sheet is usually written in a 2-column format with assets all on the left and owner's equity and liabilities on the right. The total assets must equal liabilities plus owner's equity. In other words, everything on the left has to balance out with everything on the right. So if you want to see a good example, you should go to page 283 in your textbook. Balance sheets give very important information for both people inside of the business to see how the business is doing and people outside of the business who are interested in how the business is doing. For this reason, when the balance sheet is being prepared, it has to be treated with care and done properly. You should never use abbreviations. You should never have corrections or changes appear on that final version. Everything should be corrected by the time you get there. And you should always take care to line up all your figures and your dollar signs. You have to underline when totaling a column and double underline a final total. Balance sheets can also be written using an up and down straight column format rather than the side-by-side format. To see this, you can go to page 284 in your textbook. All right, so at this point, you should be able to list the steps in creating a balance sheet. You should be able to use the accounting equation to calculate owner's equity. And finally, you'll be able to create a simple balance sheet, which is what we will be doing when you get to class.